In Chapter 4, we're going to learn how to prepare a chart of accounts, open an account, and then post from our general journal to our individual ledgers. So here's the instructions for 4-1 of the work together. Here's all of our different account names. We have our owner, Clara Ross, who owns a service business called Ross Company, and here's all the accounts that she uses. The first instructions say to prepare a chart of accounts, arrange the accounts payable and accounts receivable in alphabetical order. Also arrange expense accounts in alphabetical order. Use a 3-digit account number, and the numbers are going to be in divisions by tens. So in other words, 10, 20, 30, 40. In step 2, we're going to have 2 new accounts called postage expense and utilities expense. So in addition to these accounts up here, we're going to have to add these 2 expense accounts. And then in the third instruction, use the account form to open up cash down here below. So the first thing we have to do is take all of these account names and place them in the proper location, either on the balance sheet account side or the income statement account side. The balance sheet accounts, remember, are your assets, your liabilities, and your owner's equity, and your income statement accounts are your revenue and your expenses. So this is what our chart of accounts will look like. We have the name of the company, Ross Company, up above with our chart of accounts. Our balance sheet accounts, we have to have a title. Our 100 accounts are going to be all our assets. So 110 is our cash, 120 is our accounts receivable, Megan Alvarez, 130 accounts receivable, Tyler Link. Again, these have to be in alphabetical order. Then we have 140 supplies and 150 prepaid insurance. Our liabilities category, we have the 200 in parentheses to note that our liabilities, and we have 210 as our accounts payable Mid-City Supplies and 220 accounts payable Shearer Supplies. Finally, our 300 accounts in this side are the owner's equity, and we have the Clara Ross Capital and the Clara Ross Drawing, 310 and 320. Again, notice these are all in increments of 10. On this side, we have our income statement accounts. Our 400 accounts are our revenue. The only revenue account we have right now is 410 sales. And then our 500 accounts are our expenses, starting with 510 automobile, 520 insurance, 530 miscellaneous, 540 rent, and 550 supplies expense. Down below, we have to open up our 2 new accounts as stated. Our title here is just account number. 535 is going to be our postage expense. So here's our account title. Postage expense would have to fit right in between miscellaneous and rent if we're going in alphabetical order, and since we don't have room to stick another increment of 10, we have to go in the middle and put the 535 so it fits between miscellaneous and rent for postage. Utilities expense would be our last category since we ended with supplies expense at 550. Then the next increment of 10 would be 560 for utilities expense. The last instruction says, using the account form, open up cash. So this is a pretty easy step to do. All we have to do is put the account name and the account number to open up the individual ledger for cash. So obviously our account name would just be cash. And then we look up above to see the account number that we used for this, and that was 110. So that is pretty simple to do. Go ahead and finish this 4-1 work together, and if stated in the instructions, go ahead and do the 4-1 on your own problem. In this next section of Chapter 4, we're going to learn how to post into a general ledger from our general journal accounts. So here's all of our accounts that we're going to use for this section of 4-2. Here's our assets here and all their account numbers. Our liabilities, we have 1 to Joshua Supplies. The owner of our company is Leonard Witkowski, and we have a sales and rent expense. So we have Leonard Witkowski, who owns a service business, and we have to post all of these different transactions that occurred into his ledgers. So down below are each of the ledgers that we'll need to use, and we're going to go step by step right straight across in each row of our general ledger. So all of these happened in March. The first one is March 1st. Cash has a debit of $5,000 and it's receipt number 1. Notice our general journal is page 1. So the first thing we have to do is open up our cash ledger. And we have to put in the date of this transaction, March 1st. So we place that down here. Post reference is where did we get this information from. So it's General Journal page 1. So we abbreviate that with G1. And we know that it's a $5,000 debit. So we carry that $5,000 debit down to the debit column. And then we have to carry that balance. Right now there's no balance there. It's our beginning balance. So we're just going to carry that straight over to the normal balance. We know that cash is an asset and the normal balance is a debit. So we stay on the debit side. And then we take the account number 110 and we place it in the post reference column. It's kind of like a check mark to show I've done that posting for that row. The next one we go straight down in order. We're still on March 1st with this one, Leonard Witkowski Capital, credit for $5,000. So we go down here and we open up the credit, or I'm sorry, the capital. We place in the date, again, March 1st. Post reference is still G1. This time it is a credit for $5,000. So we place that in the credit column and we carry over the credit balance. And that looks like it's going to be the only transaction we have for Leonard Witkowski Capital. So we take that number 310 and we scroll up here and place it in to our post reference column or row so that we show that we posted that. And we're going to go straight down the entire General Journal, line by line, posting them to the correct spots. So the next one is prepaid insurance for a $660 debit. So we open up our prepaid insurance, place that date, so March 3rd. Post reference is still G1, and the debit was $660. Our account number is 140, so we place that account number here to show that we posted that. This is really helpful because if you had to get up to go to the bathroom, go get a snack, fire drill, whatever the case might be, we know right where we left off. If you placed all these numbers here down the row first, which some people like to do, you don't know where you've left off and where you need to go back and finish. Alright, so now the second part of this is a credit to cash for $660. So we're going to open up cash again, place that date, the third, credit for $660. So we place it in the credit, I'm sorry, G1 first to show where it came from. Credit for $660. Now this is where it becomes a little bit tricky here. We've got to do some simple math, but we know the normal balance is cash, of cash is a debit, so it's going to stay a debit. But we have a credit here, so that means it's going to subtract $660 from the $5,000 balance, and we are left with $4,340. So we place that right here in the debit column, $4,340. This is going to be a running tally, just like if you had a checkbook. You started out with $5,000, you took away $660, so what would be your balance here? And I always recommend using a calculator, even if we can do math in our head, just double check with a calculator. Take that 110 and place it up here to show that's completed. The next transaction on the 4th, we debited supplies for $78. So we open up supplies, put that date, March 4th, post reference still G1, and it was a debit of $78. There's no other balance, so carry that over, $78, and place the 130 to show that's been posted. Next one, accounts payable, Joshua Supplies, same thing, go to your accounts payable, Joshua Supplies, place the date, March 4th, post reference G1, and it's a credit for $78. Place the reference number in the reference column. So I went ahead and completed all of these postings. As you can see, by all the post reference numbers are intact, meaning everything on this General Journal has been posted. So let's just take a look at all of the balances so you can check your own. Cash is going to be the largest one because there's most transactions affecting cash. But remember from the basic accounting we learned that debits are meaning that cash increases and credits are meaning that cash decreases. So our normal balance is the debit, so everything has to stay on the debit side for the balance. And we started out with 5,000. Anytime you see a credit, you see it's decreasing. Anytime you see a debit, you see the amount is increasing. Credit decreasing, debit increasing, credit decreasing. So if somebody were to ask you what is your balance at the end of March, you can look at the last day on the 25th, and our balance of cash should be $3,690. So that's our running tally. If you were just to look up at your general journal, you would have no idea what your balance of cash was just by looking at all these cash transactions. But the reason we post is so you can see individual ledgers and what the balance is at the end of each month. Our accounts receivable, this guy owes us money. He started out owing us $163. He paid 100 of it, which means it goes down. So his balance currently at the end of the month, or the 16th, is $63. Again, if you just looked up here, we could see the transactions involving him, but we can't see the balance that he owes us very clearly. Our supplies, we have $78 worth of supplies. It was only one transaction involving that. Same with prepaid insurance. Oh, I forgot to balance it here, so our balance of supplies is $660. The next one, the accounts payable, this is money we owe somebody else to. We started out owing somebody $78 with a credit here. We paid $50 on the 15th, so now we owe them on the 15th $28. Again, just looking up here, we could see the transactions. We bought supplies on account for $78 here, and then down here we paid some cash on account. But if you were just looking at this, it'd be very difficult to see the $28 balance. The capital, this is when he invested money in the business, so it was $5,000 at the beginning of the month. And then drawing, he took out $1,000 right here at the end of the month for his personal use. Sales, we recorded $675 worth of sales on the 8th and $163 on the 9th for the total of $838. And finally, rent expense, we had only one account transaction affecting rent expense, so it was debited for $375. And that is the conclusion of 4-2, work together. Go ahead and finish this problem and move on to the on your own problem. This last section of chapter 4 deals with journalizing correcting entries. So we have two entries here that were found out later that they were journalized incorrectly. The first one, November 1st, discovered that a transaction for supplies bought last month was journalized and posted in error as a debit to prepaid insurance instead of supplies for $60. Memorandum number 15. So you got to look at what the words are saying. It was debited to prepaid insurance instead of supplies. So we know that if we bought supplies, supplies should have been the one that was debited. So to journalize this correctly, we write in the date, November 1st, and we write the account name that should have been debited, which was the supplies, and the document number listed was M15, and the amount they said was $60. And then we have to credit the account that was the incorrect account, so it was the prepaid insurance account. So we have to credit that, so it will subtract the $60 away from the original debit, so that we corrected it. We credit that for $60. So this is what the transaction will look like for this first set of instructions here. Second one, for November 1st, discovered that a transaction for rent expense for last month was journalized and posted in error as a debit to repair expense instead of rent expense for $550, memorandum 16. So this is probably pretty easy to do. We just did it very quickly, and you looked at repair expense when it should have been rent expense. So we have to debit the account that should have been debited and credit the account that was mistakenly debited. So we put the month or the date there, the 1st. We put in the account that should have been, which was the rent expense. That's what should have been debited, and the amount was $550. And we credit the account in error, which was the repair expense for the $550. So that's one way to correct any errors that you find in a general journal. Just make a correcting entry there to make the accounts up to date and accurate. So this concludes the Work Together 4-3. Go ahead and complete the Work Together 4-3 on your own.